macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen.
Welcome to Sep-taper. Time to get ready for that big correction into October, right? Not. All right, we're going to step back, take a look at what I talked about last week when I said the path of least resistance was lower and where I switched gears on Tuesday. So first, here's the S&P chart, SPY chart actually. And this candle right here is where we were talking last week. This was August 28th. Let's see if I got that right. Yeah, 26th, we had the big gap down on the Syria news. Then we talked on the 28th, and I showed you a lot of oscillators and indicators that told me the path of least resistance was lower, and momentum was heading that way. Remember, I made a list of my top 10 correction catalysts, and you put them all together, whether it's the taper, debt ceiling, budget talks, slowdown in earnings, and you throw Syria on top of that. That's why I said that the path of least resistance was lower. We were losing 1635 on the S&P, so I thought a test of 1600 was very likely where I would be a bigger buyer. All right, when did I change course? Well, on Saturday when our president said, hey, I'm going to get Congress's approval for this, I thought, okay, that postpones Syria action. And so I want to be a buyer on Tuesday if we gap up. We come in Tuesday morning, of course, futures were open Sunday night. You saw that gap. I had talked to my traders on Saturday and said, okay, we're going to buy on Tuesday morning. And so we bought into that gap and bought a little early, but it still worked out. And my thesis was, hey, the momentum has slowed down. You've got Syria postponed. And really what September is really about the taper. So, if they can control the international escalation of Syria and not have Russia involved and, do some sort of surgical strike, then I think the market totally shakes it off. All right, so back to the chart here. What do you have on the spiders? These are exponential moving averages, 13, 34, and 55, but we're back above the 50-day, very positive. Now let's take a look at where else we can make some money in this market. Whoops. This is the map that I gave market timers in mid-August, August 18th to be exact, and this map is still good right up to the FOMC. Things are working for us. 1635 was a big level for me. We did close below it, but the market really couldn't crack 1630. And I was a buyer in this area anyway, so I had no problem buying back up into 1650. Now, to me, so we're going to spend most of our time in here. It's really the bull's last stand. I still see a slim chance of new highs above 1700 this month up to the FOMC, but I see a good battle still taking place here, 1650, 1700. And, right now it's all about every 10 yards is a first down. That's what I told my subscribers earlier in the week. I said, hey, if we can reclaim 1650, then that gives us a shot at 1660. So every 10 points is a new first down for us. So, we left yesterday first and 10 on the 50, and it fits with 1650 as my sort of equilibrium right now for this battle. If the bulls can keep it going. What's the wild card, of course, is Treasury yield spiking to probably 3%. We're probably going to hit that this week or before the FOMC in 2 weeks. We'll get to interest rates in a minute. Let's go to the Russell. I want to just look at one other index today, and we'll make it the IWM Russell 2000 because this index is critical. Let me just talk about the technicals right here on the IWM. So this level, obviously the tops in June and July, we broke up through them, made new highs. You can call this 1,000 to 110 on the Russell 2000 index, slightly lower because for the IWM ETF, it trades at a discount as expenses have built up over time, in the 99 handle. But, you look at this chart, this thing's getting ready to crack it, right? And everybody's trying to get short, buying TZA and looking for this big drop down to say 950 on the Russell, which could happen. I'd be a buyer there. But here's another perspective. What if you looked at it in a channel like this? This is the channel for the year that we've been in. Now, you know I'm not a big fan of hard trend lines, but I think a channel can give you a rough idea of what's going on with supply and demand and back and forth. And maybe you find a regression line in the middle of it. So in that sense, I'm not drawing hard trend lines and saying this has to be support or resistance, but it gives you another idea of the trend. So here's this channel. Look where we are. And look what's happened in the past with the MACD. Boom. Nice buying opportunity here in April. Boom. Nice buying opportunity here in June. Is that going to happen again? Is the MACD going to turn up? And is this channel support valid? By the way, this gold line is the 50-day moving average. There's a good possibility the Russell turns from here and we make new highs. And my thesis is that we're long the S&P with some triple leverage funds. If the S&P goes higher on all the good economic data and being able to handle the 10-year at 3%, the Russell has to follow. The Russell has been a strong leader. The small caps have led the rally this year, but if the S&P goes higher, the Russell at least has to follow. So that's a potential trade. All right, now let's take a look at the interest rate trade. We've just been killing it here with TBT and market timer. We're in our 8th consecutive winning trade here, just playing the ranges. You know, I focus on the 10-year, and I've got some technical guys, some Elliott waivers and so forth that I listen to who think that the 10-year is going back below 2% in the next year, and I think they're crazy. I just don't see it. So we took a shot. Here's TLT. I'll just show you. We'll first look at TLT as a proxy for the bond market. You know, and you can think of this as bond prices. Obviously, bonds went to this peak. This is a weekly chart. I left the exponential moving averages on. Here's TLT breaking down. How does that correlate to the 10-year yield? Let me just explain that the TLT is supposed to be treasuries with a maturity of 20 years or greater. So why would I focus on the 10-year? Well, because the 10-year, I have a better handle on it. It's more familiar to everyone, and it seems to be more of the pivot point that everybody's watching. You know, we talk less about the 30-year rate. So I think you can still use movements in the 10-year as your proxy to trade bonds and to trade TLT. So here's TNX, the 10-year, also a weekly chart. And these numbers over here, these are the yield. Just put the decimal point, between these two digits. So this is, for the percent. So down here, the lows for the year, 1.6%. Where are we now? Today, we're taking out the highs of 2 weeks ago, like 294, and trading almost 297 yield on the 10-year. Okay, so what have we done in TBT? Well, as I said, we're in the middle of our 8th consecutive winning trade. The trade is still open. Here are just the 3 most recent entries and exits. Just in the last month, when TBT was pulling back down here at a 74, 75 area, that was about 2.6% on the 10-year. We bought that, okay? And then we were able to sell within 2 weeks up here at 2.9% on the 10-year. And took profits, closed out, and I said, we want to jump back in at 275 on the 10-year. I don't care. All these people who are saying that the 10-year is going to go below 250, I just don't see it. Taper is coming, whether it's only 10 billion or 20 billion this month, or doesn't happen until October or December. It's still coming. Interest rates are going higher. So this is the trade we're still in. We're long TBT, and this is how you have to make money. People worry about inflation. They want to buy gold as their hedge against currency debasement and inflation. And I think, you can buy gold if you want, or become a good gold trader if you could trade the swings. Sometimes I'm good at it. Sometimes I get beat up. But I think trading interest rates here in TBT is a much better game. And I think this is going to go on for a long time. So we just keep swing trading it. I'm not taking a long-term position looking for interest rates to scream now to 3.5%, although they might. I'll just take the swings out of this. So if you want to join us in Market Timer and trade TBT, beat inflation, we have a system that seems to be working for us pretty good. All right, so to wrap up, big picture on the markets here is that, bulls have regained control because, there's demand levels below 1630. If you look at the market, in June we trade down to 1560, and the market just, levitated back up. There are a lot of buyers in between 1630 and say 1570 who missed their chance. And those people who didn't buy when they had the chance last week or early this week, in a 1630 handle on the S&P, they're scrambling now. So the market has absorbed Syria, digested it, sort of priced it in as long as it doesn't escalate, and some form of taper is coming. So I think the market's digested that well too. I'm not saying we're going to scream to new highs, but it looks like there's a strong possibility that your classic fall correction is off the table for now. And I think, you can use 1630 as your line in the sand. I would still be a buyer at 1600 in the S&P. All right, that's my take on things. Thanks once again for joining me, and we'll see you next week.